You have questions, we have answers. This is Jane Miller.
And this is Ken Miller. Welcome to our show, all about real estate with Ken and Jane. All right, Jane, so the topic for today is going to be titled Fed Rate and Market Update. So last Wednesday, the Fed came out with their evaluation of the market and the inflation, and it's very encouraging numbers. The inflation rate they reported is all the way down to like 2.7%, which is pretty close to their target rate of 2%. However, unfortunately, the Fed Chairman Powell stopped short of doing a Fed lending rate reduction, saying that although we're close to the 2% desired goal, we're still not there yet. So we got a little bit more work to do. So they didn't make any changes to the lending rate of 5.25 to 5.5, which has stayed that way since July of 2023. However, what's came out of the meeting based on the economists, from different sources, is that they're optimistic that in the future, the near future, maybe as soon as September, the Fed will have a few rate cuts and could drop as much as 1 to 1.25 percentage points by the end of the year when all is said and done. The one thing they cautioned is that they've got to be watchful because if they keep reducing, because inflation is coming down because consumer spending is coming down, and if consumer spending is coming down too much, that could stall the economy and result in unemployment. So they've got to keep a watchful eye on the unemployment figures, and you've got to always balance those two. So in view of the fact that the Fed doesn't want unemployment to get out of control, they're going to most likely, again, I'm not an economist, but that's their reasoning. They're most likely the Fed will reduce the rates. So you could be so when all said and done, you could be looking at mortgage rates of around maybe low sixes, maybe 6.25%. by the end of the year.
You know, Ken, the good thing about you and me is we go, the opposite side.
Right.
You're very much into research and this and that. That's great.
Yeah.
But I think a lot of time, right, the market could just happen. Sometimes there's a reason, sometimes there's not. So we haven't talked about the rate for a long time because last year I remembered every month we talk about the rate because it's keeping going up. But since July, we haven't talked about it. And even though the end of last year, there was talk this year they may be going down 3 times as early as March, later on May, but we didn't talk about it because somehow, right, once again, that's my psyche side. Somehow I just thought it may not be that simple. But they're going to drop the rate. But having said that, and just news, right? Just news they may drop is already result the interest rate went down in January. So that's already made the market came back more. Say, look at last year, right? I know we talk about rate as tied to the market as well. So last year, the market from June until December is relatively slower and no longer going up and slightly down, in my opinion. And people can have different opinion. That's my experience and opinion. But since December, when people talk about possible rate cuts start March, I just see, fresh buyers came out and the other buyers came out too, so push the market a little bit higher in the first 3 months to 6 months, this year. I think a lot of time, right, is combined with very low interest, very low inventory as well. But just talking about the interest rate here, I personally, once again, I have no base, okay? I'm just personally feel I think the rate cut may be in September. Why I feel that way? Because I feel, we just heard Canada and the European Bank reduce the rate already. So that's a signal, right? I mean, at the end of the day, we live in international village here. So if a butterfly flip the wing in one side of the world, the other side may feel the draft, right? So I feel that would be a beginning. If they keep cutting, we have to do something, right? Secondly, I mean, I know people don't want to talk about it or want to talk about it or passionate about it. Election is coming up, Ken. Mm-hmm. So if you reduce the rate in November, what's going to help you election, right? So most likely September would be good time seems to, if you want to reduce the rate in 2024, I think it just makes sense to drop it in September based on, as you said, right, the Fed probably don't want to the inflation come back, but on the other hand, they don't, because you get a report, it's really the data is from the past, right? So you don't want to affect the employment rate. So you don't know. So I think if I were sitting in their chair, I would say that's a cut, a bit in September, helping the confidence, helping inflation. And also, if there is job in employment, that would help to stop it or slow down that. So in all aspect, I think I hope they're gonna cut the rate a little bit in September. That's definitely gonna help a real estate market here.
Yeah, and I think in this case with the Central Jersey market, whether certainly if they cut the rate, it's going to help more. But I think that the driving factor is the lack of inventory. So
yes,
so the market. You do the residential. I would think that the residential market is fairly strong to begin with. So when they further cut the rate, it's only going to help increase the productivity and sales data for residential. And you were saying that in recent times, from maybe May or mid-May till where we are now in June, towards approaching the the middle of June, that the inventory has increased a little bit, but that's maybe more due to the fact that it's a spring market. So people tend to put their homes on the market ideally in the spring. So, but are you still seeing? You're still experiencing the competitive bidding over asking price, and the whole bidding wars, right?
I think, Ken, once again, there are significantly more homes come to the market in the past 4 weeks or so, 4 to 6 weeks, right? But bear in mind, we had a very, very tight, dry winter and the spring market, right? So typically, you will have a lot of home put on the market traditional March and April, but this year was very quiet March and April. I was joking, this is true. I've been in business 15 years. I work every Mother's Day, open houses and appointments every Mother's Day except this Mother's Day. Not because I want to suddenly take it easy and have some free time. No, I truly had no home to sell. So everything is, very, very few listing came on the market.
Oh, and we should mention, speaking of Mother's Day, is my mistake and your mistake. It's a happy Father's Day.
Yes,
That's what we forgot to. Certainly want to wish all the dads out there a great Father's Day, and don't do any work today.
Unfortunately, Ken has to come to save the day because we have clients would like to have additional open houses, so we're working. So
that's right. But this year, it's not considered work; you consider it enjoyment.
That's right. I do. Yeah, so. Because every year, I work Mother's Day, but this year, truly, there was a very, very tight inventory in winter and the spring market. However, last 4 weeks to 6 weeks, we have been seeing more home come to the market almost every day, right? But if you look at the total number, the first 2 quarters, right, is pretty much at par with last year. It's still tight inventory. So just like it's like so much water came through the pipeline, right, and there was nothing in the beginning. Now suddenly you feel like, it's flooding. It's not flooding. It's just because before it was almost dry. And
it's all relative. Like if we go back to the COVID time, now we're talking about getting rates hopefully down to the low 6s, in September or definitely by the end of the year. It's all relative. Now people look at that and say, man, that's great. But if you look at it during COVID and you mentioned the 6% interest rate, they'd be like, whoa, that's so everything is relative in what you're adapted and what you get used to. So being in COVID for those couple of years, everybody had the gravy at like 2.75, 3%. So going to 6 was like, wow, you're doubling it. But now in the recent years, you're at that 7 to 8% even at one point. Yeah. So when you drop it, you drop that additional point and a quarter, the lending rate it makes a difference. So it's like everything else. It's like if you're used to running, short races, like maybe a 6 kilometer, and then you have to run a marathon, then you go back to running like a I don't know, a half a marathon. It's all what your body, you get
Yeah.
used, you get acclimated to. So.
I still remember very clearly, Ken, 2 years ago in June, after that meeting, the interest rate jumped, I think, 2-3 times in one day. Okay, in the once they had a meeting, the one day, 2-3 times. By 4 p.m., they went up total almost 1%. The
Right.
rating, and that day, 3 contract was under attorney review. Got canceled that night. The reason was 2 no longer qualified for extra 1%. The third one can, but the buyers got too nervous, too close to their comfort. So at the end, they decided to cancel. But you know what? And gave another week. And somehow the people was shocked. After the shock, the 3 houses we sold anyway. But it's just like the shock, the initial shock, right? In one day, the interest went up, almost 1%. The payment went up. That was shocking. So a lot of, I still remember that time. So that was really, now if the market, the interest rate went down a little in January and February, later on when the news, the rate not going to be cut any sooner, so the rate went back. So I always remind the older buyer agent when they put an offer in, I said, please check with your lender. But if your the pre-approval is February, you better check with your lender because I don't want later on, rolling the term review or finish the review. And when you buyer contact the lender, because normally is you have a pre-approval, the last generally maybe 3 months. That's 90 days for the expire. So you talk to your lender and then you put an offer in, accepted when you finish review, and then you go apply mortgage, and then you might have a shock, because the rate is different from February versus in
Right.
May.
And I think with residential loans, the lock-in rate is, you can be extended, but normally
They
is it
can
normally a 60-day or
Ken,
30
no.
days?
You're too ahead of yourself. That's the beginning. You didn't lock the rate yet.
Right.
Because think about it. You talk to a lender, and they give you pre-approval. The pre-approval till, if you talk them to February, they will till pretty much May, right? And then, but when you bought a house, 90 days, right? When you bought a house in May, the rate actually went up from February.
Oh, I got you.
So you can't lock the
Right.
rate unless
And-
you have a legal contract.
And the other thing that's important to note, lastly before we take a break, is that the borrowing amount that you qualify for could change
Yes.
drastically because if the rate goes up by 1 or 2 points.
Yeah,
like it did-
that's
like
a
it used
lot.
to do, that's a lot. So you don't qualify for that same borrowing capacity, and hence your home search has got to be altered.
Altered, yeah. Even you're qualified in our market, right? But you too close to your comfort zone.
Right.
So that a lot of people want to buy a house below their means. They don't want just like exact amount. They still want to have a money for their vacation, for their other uses, right? So when they're too close to the upper limit, they may just reconsider the whole thing. Yeah.
All right, we're going to take a short break. We'll be right back after these messages. All right, welcome back to our show. So we're talking about the Fed rate market update. So I just want to share a little bit of a tidbit. I was last week at the RE/MAX Global Symposium held down in beautiful Tampa, Florida at the Marriott. It was quite a nice experience. We had people from all different countries, the Philippines, a lot of Canadian RE/MAX brokers and agents were there, as well as all around the country. And one of the things, obviously, the commercial field, they're wrestling with the high interest rates, which are higher than the residential. And one of the presenters gave a good option, which makes a lot of sense for certain business owners. If you're an owner user of a certain building and you're looking, you might want to consider a sale leaseback option, which is something because if in 5 years you might retire, or if you're a franchise owner and you want to acquire additional capital, let's say to buy a second franchise, a sale leaseback would give you the option of where you sell the building that you're currently occupying and you negotiate up front the lease term so you can stay there. That gives you the advantages are you get equity up front. You don't have to worry about managing the building. You're into a lease. And this is also attractive to the purchasers because they're acquiring an investor, likely would be a cash buyer, but they're acquiring a building with a tenant with a known, they're going to know what the cap rate is. They're going to know the lease terms. They're going to have likely a long-term tenant. So it's considered a win-win situation. And because if you just put the building on the market and your cap rate might be like 7.5% or 8%, typically the commercial loans might be 9 or 10%. You're not going to, in all likelihood, you're not going to attract somebody who's going to need to borrow money because they're going to be underwater. Because if the cap rate is less than what their interest rate is for the mortgage, it doesn't make sense as an investment. So it's just something. It was a 20-minute presentation, but it's something it's a strategy that across the nation certain industry owners are employing, and it's again applicable. Again, if you want to get additional capital for whatever reason, or if you know you're going to retire in 5 years, why not sell now? And that way you have your equity up front, and you don't have to worry about it, or you can focus just directly on your business.
That's well said, Ken. Even though, you just mentioned as for the commercial smaller operator owner may consider this option. In fact, a long time ago, my past life, I was the manager in the large institutional bank. At that time, we always give the large corporation, like the top 500 in the world, similar advice. If they sell their buildings and then cash in, so they're going to help dress up their balance sheet. That's going to help their cash reserve. So they can lease, because that's treated differently in the accounting term, right? Either you own the building or you have the cash at hand. So that we're going to help them with certain ratios and future development, the new product investment, and also to merge and acquisition.
Right.
So that's really my point is regardless your individual commercial property owners or your large corporation, this is a very good, useful tool. But, consult your business consultant.
Consult your qualified agent that can
consultant
consult
or
you,
accountant.
Your accountant, too, for your tax implications. And then certainly if you sell an asset, from what we learned from the CCIM training is that you have the sale price, and then you have to take into, then if you have every year you typically have depreciation, so you have to do an adjusted cost basis where you have to, which lessens your basis because you have to minus out the appreciation, and then you've got to figure out your capital gain tax, and then your tax on your cost recovery, which is your depreciation. And so so definitely want to consult your qualified accountant who can advise you what your tax implications are on that.
Yeah, especially for the owner, if you are thinking about retire in like 5 years, right, 3 to 5 years, that's really worth to consider, because that's a very good exit strategy. Have to, because nobody knows in that time what's the price gonna be. At least you can plan ahead.
Yeah, and the presenter was a lady from Detroit, and she's working with a rapper or somebody who was in the rapping, and they're building up, they're revitalizing Detroit. And she mentioned that it was also a franchise owner in that market did that approach, so they could buy a second franchise.
Yes, that's really
so that's
useful.
So it's pretty cool.
Yeah, wow, that's always good to attend the international or national convention. So always able to learn some new things. Right?
Yeah, that was a very useful thing. And then there was a lot of and they had their top agent panel from across the country. I know we covered that for the listed agents, in detail, but there are a lot of the similar themes for commercial agents apply to, the same philosophies apply to the residential agents, with the work ethic, diligence, persistency, knowledge, consistency. The only question was the panel had 5 people, and there were about 25 questions presented to them, and they had to say yes or no, and then they asked them, "Do you work weekends?" And that wasn't a clear consensus. But I think most of those commercial agents said that they work at least a Saturday or a Sunday. Yeah, one of them quantified it by saying, "Well, I only work a weekend if I took off a weekday." So it's not quite the consensus for them is split between whether they work weekends or not. But I think any top performer, It was interesting too. They, they covered the expert that it takes 10,000 hours to be an expert. So if you devote 40 hours a week for the typical, which is not really your commercial agent's typical work week, it's much more now. It would result in a little bit less than 5 years to achieving an expert. And of course, that can be sped up. If you devote more hours per week, you'll be an expert in a shorter period of time.
Ken, I totally agree. When I started 15 years ago, I worked 15 to 18 hours a day, each day. So the first 3 years is just learning new things. I was like a sponge, just learning, make mistake and learn from it, and watch other people make mistake, learn from it, and watch other good examples, learn from it, learn from the seasoned agent. So that was great. But seriously, you have to put the work in, right? Everybody deserves to have a family first. I agree. But sometimes, in our case, we have to decide, right, how we're going to achieve that balance. Luckily, you and I work together. We can cover each other. We work weekend, but we make sure our daughter is well taken care of. But unfortunately, not everyone had that ability, right? So that's a lot of sacrifice made by the top producer to get there. At the end of the day, people ask me whether, advice I can give to the new agent. I said it's hard because at the end of the day, it's only you yourself can decide whether you want to sacrifice certain things in your life in exchange to be top producer, or as you said, 40 hours a week, you want your weekend with your husband, you want a nighttime with your girlfriend. That's all great. Or spend time with your family. That's all great. But at the end of the day, it may take you 10, 20 years to be a good producer, right? To be in a top producer, even for us now, being in the business 15 years, I still get up, 6:30 every single day to go through the market, go through everything. And once I had a client ask me, say, Jane, if you suddenly have a very busy period, like in 2 weeks, 3 weeks, you suddenly have double the inventory, client calling you, what are you going to do? How are you going to balance it then? I said, well, instead of get up 6:30, I get up 5:30. Like that, they laugh.
I think that's just a theme for successful people. They have a schedule, they stick to it. If they allocate time for certain things, they don't blow that off. They dedicate their time to whatever, whether it's marketing, whether it's sourcing, client relations. They just stick to that schedule, and for the personal time, they don't deviate.
But you know what, Ken? A lot of time, right? People ask me, when do you have fun? I feel I'm having fun. Every day I talk to people I love to work with, and we love our broker and the colleagues and team members and the clients. And it's like, instead of having a lunch with my girlfriend, I could have a lunch with a client. Instead of going to a party, I could have open house talking to different people, tell them how good, how wonderful, the property offers and how good the neighborhood is, right? It's just like, it depends how you see what is work. If you tell me to do the, run the block for 10 miles, I would say that's a horrible work. But you want me to stand there 3 hours, keep talking about the house, real estate. I think, to me, that's not work. Right. That's really, that's quite enjoyable.
Happy to work today, this Father's Day.
That's right.
When you're done here,
it doesn't bother me, Mother's Day, Father's Day, any day, because we can have an early brunch, or we can come, dinner after the open house. So that's really, depends how you see it fits, right? Obviously, sacrifice the family, just workaholic, that's really not, you get burned out in the long run. But a little bit of balance, but you have to put in extra work. If everybody put in 40 hours, if you put 40 hours, you're average. Right. You have to put in more work. But coming back to the market,
let's go back to the market. And one last thing, I was very happy to see that after I returned from the trip this past week to Tampa, that the dogs were that none of the dogs were missing, and they seem like they're well fed, especially the little ones. So, which was a very good surprise. I don't know if I should thank you or Miss Maria, but one of you guys did, or both of you did a good job.
I think both of us did a great job for that. Yeah.
Right, now we'll get back to the housing market. And
the housing market, right? Yes. We have been having more inventory, as I mentioned, since the third week in May. So now it's like a lot of more home on the market. But I feel the market is still good. but it's not as you have a long line like open house. You have so many people lined up. You have so many offers with everything. I think the market more tend to more reasonable from the buyer perspective. So we still have a multiple offer, but the offers is quantity-wise is not as many as it used to be. So I explained to the owner, it doesn't matter you have one offer, you have a 50 offer in the last 3 years ago. But at the end of the day, are you happy with your offer? If you're happy with your offer, we're doing good.
And to follow up on that, are you seeing that the buyers are not necessarily waiving as many rights as they were? Is the appraisals back on the table as a contingency? Or the home is a full home inspection still back on the table, or
case by case? Can certain really nice home, well done, and you still have a fighting, bidding war with everything, because at the end of the day they love the house, right? But most of the home you will have people they may waive from the asking to whatever they overbid, but not as many people will waive all the way. Not as many people. So as a listing agent, have to be pay attention. Don't overprice the house, because otherwise, first of all, you may not have a buyer come forward quickly, or even you had, but the appraisal, you may have a difficulty. Yeah.
Mm-hmm. Okay, good. So, and lastly, before we say bye for this show, you still see it for this year as continuing to be a seller's market, given that the interest rates may start dropping?
I think so. I think the market is really, interest rate is a big force. But on the other hand, I think the type of inventory, still the main reason why it's still in the seller's market. Yes.
Okay, well that's it. We hope everyone enjoyed the show. Wish everybody a happy Father's Day, and we'll see you next week.
Thank you.